Hey everyone, it's Alissa Coram and Jim Roppel here for the first monthly market report with Investors Business Daily. Jim, hedge fund manager and founder of Roppel Report. It's great to see you.
Great to see you.
Yeah, well, and hey, we're in a bull market, so that makes things even better, doesn't it?
It makes it so much better than a bear market because there's so little to talk about, but there's so much to talk about now.
Exactly. There's so much to talk about. So we are going to go over the month of March. There's a lot to unpack. We're also going to be talking about some trade ideas, and just all of your experience brings so much context to what we're seeing in the market, and we'll make it as actionable as possible for people out there. So first, let's talk about the month of March in terms of index performance and what you saw.
To me, it looked like the first day of the month, we basically set the high and we spent a lot of time digesting. And since this bull started, the biggest pullback's 4.4%. This month compressed the market down to the MA. We're now 2% over the 50. The tranquility and non-violence of this, it wasn't a pullback. It was just sideways. The market is so strong. It just won't, it shakes for a day or two and it comes right back. I mean, this is so unusually powerful. It's so rare. I once said in an ideal world, we would have a really bad bear market, which I think we probably had the fourth worst bear I've ever seen. I would get huge at the bottom and then, and just sit and make a killing. And we had this terrible bear market, which by most measures was it wasn't as bad as the dot-com bubble. It wasn't as bad as the credit default swap housing burst. But post that, it's kind of hard to find another one that bad. And the rubber band got stretched so far and now it's recoiling. But at the same time, we have AI, robotics, biotechnology, restaurants. There's like a renaissance in American innovation and golden goose everywhere. So we had this terrible bear, crushed valuations, and now this bull recovery, which is so atypical that it's powered by so much more. And that this month, we have this perfect digestion. It doesn't get, if Bill was here, he wouldn't be able to contain himself.
Yeah. Bill, as in IUD founder Bill O'Neill, who you knew personally and who was a mentor to you. So yeah, that's a great guiding light. It seems like for your trading style. And I want to ask you a little bit more about what we saw in the month of March in terms of maybe the broadening out or the rotation, because Jim, I know for a very long time, you have been talking about the Russell and wanting to see that get into gear and get out of this trading range that we saw for 2+ years. Now we're starting to get that. It's starting to happen.
And I think a lot of people became really fussy when it broke out and then it pulled back and then it tried to come out again. And there's all this negativity. And I'm like, hey guys, things go where they want to go, but just maybe not on your schedule. And the underlying fundamentals and the leaders acted so well. And let's lean into it's a new bull market here and not call every wiggle down a new bear, which there was so much this is great stuff. I mean, did it explode out like an internet stock? No, but there's 2,000 stocks here. I mean, this is like an Olympic athlete with some cinder blocks on its legs. It's coming out. Let it go. I mean, look at the mid caps. Okay.
Yeah.
This is really, look at MDY. What are you putting up?
Yeah. Here's MDY.
Okay. This thing is not coming out of the lows like the Russell. It's in all-time new high ground. This is what we need out of the Russell, but it may not occur. This is a much smaller index and it's full of more robust names and it doesn't get jammed up with banks and these, lumbering sectors, but we're in bull move. This is great corroboration. Both the Russell, we would like it to be a little more robust, but the MDY is hopping.
It really is. So I think that was a pretty significant development in March to see that mid-cap action there, Jim. And I also love what you said about, there's going to be these days that might want to shake people out, wiggles and wobbles, as you said. Do you feel like people are sort of still having that knee-jerk reaction on down days?
I think people haven't shaken off the pain of the last bear. So any sign of weakness, they flip. They're not leaning into history and bull market action. Like if you look at CrowdStrike or ANET or any of these names that didn't have ideal action, like I call them like Mother Teresa or Gandhi days. Like these are both incredibly virtuous people who walked into a 7-Eleven and yelled at the person behind the counter. They're still virtuous people. Because Fidelity decides to blow out 2 million shares of CrowdStrike on an earnings report, it doesn't mean the stock isn't the single leader in one of the most impressive total addressable markets there is in all of business. It just had a rough day. And there's so many people going, oh, it's over. It's reversed. And this is probably going to go on to be one of the bigger TMLs of this cycle. I mean, you do have some problems with FTNT and Palo Alto, which are a clear caution. But CrowdStrike's not acting like that. And maybe they are stealing market share from these other guys. And they also have a slightly different platform. But the point, look at ANET. Okay.
Last Wednesday, was it right? It had an outsized down day, but found support at a logical level, Jim.
Right. And even over the 192, it came out and it's pulled back, and there's some wiggles and wobbles in there. And if you go back to the last earnings report, it had a big gap down. Look, you look at TMLs through history. I mean, stocks go up, 400, 500, 800%. They have some bad earnings responses, but it doesn't mean the stock's dead. It means it had a rough day. But if you were buying big around the follow through day, you have cushion. Let these things, stocks don't triple in 3 months. Okay. 96 weeks, 4+ beat and raise quarters. I want people to make a lot of money here. Okay. I've never heard of somebody making a killing in 3 weeks. Okay. Right. These 0-day options. This is absurdity. I agree. Some gambler might make a killing in some short dated options, but they're going to be washed out in the next cycle for sure. You want to change your life. You want to firm up that retirement or just make a simple killing. Get in these monster TML 99 comp leaders with these amazing total addressable markets and grab some bench.
There you go.
Let them work like fine wine. Nobody's drinking one of the best California cab vintages was 07. Let them sit 9 years. No history. They peak in 10 years. Let's let these TMLs do their thing.
Yeah. And for the uninitiated, TML, true market leader. I love all the vernacular that you use, Jim. And I have to disclose, I am in ANET and I was buying on the follow through day. And Jim, I have to give you a lot of credit because over the last year or even 18 months, long time, and we've been doing videos together for quite a while, but over the last year plus in particular, I credit you as one of the main reasons for why I've been so bullish. And I want to credit you for a lot of the success that I've had in this market cycle. And I was getting aggressive on the follow through day. I was in that 99 comp blue dot stocks. And we did that crypto webinar together in mid-November. And you actually called me on the follow through day. Do you remember this? Because we were prepping for the crypto segment and you were asking me, what did you buy? And so that made me feel really good to be able to talk to you that day. So thank you, first of all, for your guidance.
Bill would be so proud of you, but I'm not doing anything that he didn't teach me and everybody else in the world who would listen. I mean, he screamed it from the rooftops about, for 30, 40 years. If you read his Brunswick chart, he basically says you want to get huge and sit for 3 years. I mean, look, if you're in a taxable account, trading for 10 points, 15%, 20% and sell, we just had a terrible bear market. Okay. The average move in the Dow after a big bear market is like 104% over 4 years. The market, The market bottomed a long time ago, but the follow-through day that really kicked off growth was November 1st of last
Yeah,
year. That's when money
absolutely.
started to really get made. So
Mhm.
let's look forward here. How many guys are going to make a killing in this? How many guys are going to sit for 4+ beat and raise quarters? Okay. If you sell in less than a year, you're going to pay 40% tax plus state. If you sit for a full year, you pay 20%. I don't
And
want to
that
give
is
you
if you're not seeing those major sell signals and all that, of course,
in the Roppel
goes
report, I
without
put a
saying.
list of stocks that came out right around the follow through date. They had 9 weeks in a row up.
Mhm.
That list has lost 1 or 2 names, but most of them are still intact. And again, there will be a few stragglers that have real validity and 99 comp TML quality that'll come out late. But most things coming out now are like it's not all breakouts are equal.
Yeah.
Junk breaks out too. But the original leaders that came out with a wall of blue volume in weekly and daily are the ones that are going to get you to the finish line. But I don't want to see people sell a stock. I did this, and McAfee Associates came public in like 1989-ish, I don't know. And it was after a bear, and it went up 20% immediately. And I was in the syndicate, and people dumped the thing. It went up 1,800%.
Wow.
We just had a disastrous bear market here. All right. I mean, I don't want people to be selling stocks up 20% that are going to go up 200. Now, again, you said sell signals. You break the 50 violently,
Right.
trim back, but don't suffocate potential life changers.
Yeah. That's such great advice and a really great reminder. And Jim, I also want to ask you about, for those out there who maybe aren't as bullish or heavy, as aggressive as maybe they want to be in this market here, how do they get in at this point? If they weren't getting heavy on that follow through day in November, and we had some pullbacks first or second week rather of January for some of those leaders. It seemed like that was a good time to be adding. But what about now? Is it okay to be using more aggressive, shorter base, shorter entry points? Like you said, grab some bench. Well, how exactly do we do that?
What's so peculiar is the strength of this market is not allowing the normal 3, 4, 8% to 14% pullbacks a year down to the 50-day and below. So this market has been a runaway. The Goldilocks scenario where the growth is emerging and the economy is stronger than people thought. We are nowhere near having a recession. I actually believe if you look at housing stocks, you look at retail stocks, you look at Williams-Sonoma, Colbert KKR, you look at the discretionary index, the economy is not slowing. It sure doesn't look like it to me. The stock market is not. So we're not getting these pullbacks. I would say don't be a rookie. Okay, number one rookie move is not cutting your losses. Second biggest rookie move is over trading and tied up with buying extended. Don't buy extended. I know I'm fired up, but I don't want people to go like say you came off of Gilligan's Island and you got to the mainland today and you see what you have. Make sure you're buying some digestion, some pullbacks. I can give you some names.
Yeah, let's give some examples for folks, because honestly, I think some of the digestions that you've been pointing out in your weekly Roppel report, that they're not big long cup with handles anymore. They can be these shorter, more aggressive digestions.
And look,
so there's a difference between doing that and buying extended.
The shorter the digestion, the higher probability it's going to fail. I want to only add over a 2-3 weeks tight. I can start to build a whole position like in a service now around the 10 week on site. I'm so sorry about that.
It's okay. Someone is not watching this. They're trying to get a hold of you. They need to be, or maybe they're texting you about our segment. I don't know.
But my podcast etiquette is poor. I will.
Okay. It's okay.
Okay. So look at this thing. This is a 99, 98 comp name, software as a service, killer CEO, infused with AI. Look at the history of stability of earnings here. Not only is it growing at an exceptionally high rate, It's doing it with amazing stability, earning stability 4 with consistent earnings growth in the 20% range.
Yeah, 32%. The 3 to 5 year growth rate is 32%.
I mean, the CEO of this company is a rock star. And unlike Alex Karp, who was another rock star, ServiceNow is in gear. There's no shake and bake, and it's not acting. This is acting like a TML. Now, it's sitting right there. I'm not saying throw the book at it, but build your position as it advances. If it breaks the 50 horribly, blow the thing out and move on. But this is a stock. By the way, I've kind of screwed this up. At the dead lows, I did not think I was witnessing accumulation after the follow-through date, but it was there. There's a wall.
You're talking
yes.
in October, November?
Yes, it was persistent. Now, it was not a skyscraper, okay, like a Trump Tower next to a one-story building, but it was heavy and it was consistent. And the institutions that own this is high quality. And here it is sitting. Nobody wants to buy them when they're lower. They're like, oh, now I'm nervous. What's wrong with it? Lean into the fact that we are in a powerful bull market.
Yeah.
So I would start building here. I'd work my way in and I'd cap it off into new highs. And again, it's really important to know at this minute, earnings season is going to kick off chop. Yeah. And if you're up to your eyeballs in stock, you need to know, hey, you have to narrow that buy list down to the elite, the final 4. Yeah. And I think this qualifies. It's liquid. It has the total magic elixir, crazy high liquidity with extremely high earnings growth. Mm-hmm. The only stock I can really come up with better would be NVIDIA. And NVIDIA has a much shorter digestion. It's not quite anywhere. It's nowhere near its MAs like this.
Right.
But, can I segue?
Please. I have to disclose, though, I do own ServiceNow, and that's another one I was buying on the follow through day. So I'm keeping an eye on this base too. So they're not all just short little digestions. There are some quality stocks out there forming those bases. But yes, please segue.
I was about to say, NVIDIA has a short base and it had a big reversal 4 weeks ago. There are really highly acclaimed, notable people saying we're going to have a crash. One of them follows Elliott Wave. This is a well-known dude. There's another guy who's super well-known who's literally shorting stocks right now. These are remnants of the bear market. They're talking about valuation. Part of them is Elliott Wave, but the other guy is talking about valuations. I'm like, I was about to say about NVIDIA, it's never going to be cheap. You are knocking out triple-digit sales and earnings, and it trades $1 million a day at 900. Mm-hmm. Where in the world are you going to get that type of magic elixir of volume and earnings growth? ServiceNow has it. It's not as dynamic as this. Right. But Bill would say over and over, well, the best stocks are never going to be cheap. Okay. Yeah. If you're looking for cheap, you're going to miss all the monsters or almost all of them.
Mm-hmm. Yeah. And Jim, I know, last summer when NVIDIA was basing, I believe was the time that we were talking about this with you. You were like, just wait 6 to 12 months from now. Let's see what kind of market cap this is going to get, because not only did we have the technicals and the fundamentals, but the fundamentals supported by that huge AI story. And this is the leader. So seemed like this was a pretty fat pitch. And of course, I got to disclose here too, I do own NVIDIA from pretty far down. For me, there's a leaderboard definitely has a lower cost basis than I do. But second week of January, that flat base breakout, that was pretty classic.
I want to, number one, say I could be long or short everything we are talking about. I have positions in almost everything we're discussing, and I could change my mind, but I have to give a shout out to Webby. My wife owns NVIDIA at 51.50, literally to the penny.
That's awesome.
But I'm wrong a lot. Okay. I'm wrong. But here's the thing. People are getting the Roppel Report like, this guy's not. I'm like, yeah, well, we're the strongest bull market. One of the strongest I've ever seen. I'm normally wrong 7 to 10 buys. And now I'm wrong. Like, it's not me. The market is supporting.
Yeah, exactly. Yeah.
I really, selectivity. When I would talk to Bill, he wasn't in a leader. He was in the leader, the leader. Invariably, triple digit sales and earnings if the market was providing them. And if not, he was he was always in the liquid leader, always, whether it was Corning Glass or RIM or
Google and Apple in the
total
odds.
in tandem, side by side, those two. So because everything's working, is giving you a false sense of security. This is not normal. I'm wrong 7 out of 10 in normal markets. This is not a normal market. This is a raging bull market that is broadening out. We didn't talk anything about medical. We didn't talk about SRG. That's a whole nother sector. We didn't talk about restaurants. We didn't talk about robotics. I mean, there's so much happening here.
Yeah. There really are. So yeah, it's not just your chips and software, although there are a lot of compelling names there, but you mentioned medical, you mentioned restaurants. And so we even have energy and financials participating, not your classic growth areas, but they're still participating quite well.
People completely underestimate. People don't even understand blockchain. They don't know what it is. They have no clue. They actually, honestly, the average guy out there knows what Chat GPT is, but they don't understand. I don't even understand the implications for long term. I mean, when they invented electricity, did they go, oh, light bulb? What about refrigeration? What about fans? What about, I mean, this is going to be a long boom. Think about how long it took to implement the internet, the infrastructure, then the applications. Like blockchain is the same thing. It's so darn early here, and it is going to augment the power of the overall economy. It's going to bring down, everything we're talking about is deflationary. I mean, this boom, I think just lay over the build out of the internet, 15 years. I mean, we really think about initially people like, I'm not putting my credit card out on Amazon. They're scammers. This is going to take a long time. Bubbles don't build in 9 months. Okay. Bubbles take time. And we're going to have, look, the 1998 global currency crisis broke out in a bull market, and it righted itself over after like 3 months. We were down like 33% in 3 months through the summer. And then it went right back into it. There could be black swans. There's a lot of problems in the world. There's who knows what's going to happen in Russia, Ukraine, all these people coming over the border, how many terrorists are in there. An asteroid could come in and smash Goldilocks.
Yeah.
So don't go Jim's bullish, dismiss my stops and position sizing. Right. Let's just lever it up and go. You're going to get killed. There will be those pullbacks coming. So, yeah.
No, we definitely need those warnings and reminders. And Jim, you mentioned how there are well-known and very smart investors out there who are bearish or calling for a top or calling for a bubble or shorting. I mean, that's good for the bulls, right? We don't want everyone on one side of the boat.
It's like funding rates. The funding in cryptocurrency is extremely low right now. Inflows into funds, very low. When I was a retail stockbroker, people would send me cheesecakes and bottles of wine at Christmas, and my assistant would write down, Jimmy had 140 phone calls incoming today. You couldn't talk to them. They just wired $500,000 in. Like, no, I don't even need to talk to them. Now you have to sell these ideas to people. They're not buying them. This is early. It's early because of the people selling short, don't believe it, talking about valuations. People don't understand history. The history of innovation in bull markets and TMLs. This is a monster opportunity that is not, when this cycle ends, I think it caps off the super cycle, the secular bull. I think it also is going to elongate the secular bull because we have this wild breadth of innovation occurring in the later stages of a secular bull. But when this is exhausted, do not expect this action again. This is an opportunity.
Yeah, and it sounds like you are taking full advantage. So let's also give our audience a little bit more context about what you think supports the bull case with where we are right now. In our pre-show, you mentioned Fed, of course. So talk to me about that and what we're seeing out of China and some of those other factors that you're seeing out there.
Okay, right off the bat, this is a Goldilocks moment. I mean, it's not too hot, it's not too cold. I actually believe on based off of the action in the market, the shallow nature of the pullbacks, the sideways instead of down pullbacks, the way the leaders are acting, the dearth of stocks blowing up, coupled with, I mean, the IPO market is just barely opening. We've had about 4 or 5 deals. They're acting well. They're not perfect, but they're acting very well. You cannot underestimate. China is the second largest economy in the world. And you look at their demographics, you look at the trade war, you look at the rhetoric about war. We had a follow-through day on the SSE and KWEB and FXI. And it's kind of like when George Bush drew the line in the sand, bombs flew, and we had a follow-through day right around that period. It looked like we're going to war. And the rallying cry was, oh, Iraq has the second largest standing army in the world, and it's going to be the mother of all battles. That's when it's uber dark, is when you have the most powerful follow-through days and powerful recoveries. I'm not saying that the Chinese follow-through day cannot fail. I'm just saying that when it's really, really hard to buy them is when you should. And the names, the individual names are hard to find in China, but the point is that market's turning up. Whether they're stimulating or the economy's turning, I don't know, but it is augmenting the whole world. Okay, you look at the world, Europe, Romania is almost at an all-time new high. Poland's at almost an all-time new high. There's so much happening here. We have a soft landing in the U.S. I don't think the Fed is going to be able to cut as much as people think. I mean, look at Williams-Sonoma. Look at the housing stocks.
The builders.
Look at this. America's wealth is tied up in their homes. They feel confident. Look at Walmart. I know it's lower. There's less durables there, but it's acting really well. Look at RTX, Williams-Sonoma. Williams-Sonoma is not a ketchup. Okay, it's not toothpaste. People are buying things there that are high end because they feel confident. I don't see a big slowdown here. So I wouldn't be shocked if the Fed can't cut. I mean, I know that's not mainstream, but Allie, what does that stock say to you right there?
It's looking great. I mean, it could be a 3 weeks tight this week after some explosive weeks. We've got the skyscrapers of blue volume there. I know you're a fan of that. I'm a big fan of Williams-Sonoma, and I just bought a bunch of furniture from there for my grandparents. They're moving to North Carolina, so I'm very familiar with this brand.
When they're doing well, this is not a low-end purchase. People are not hoarding their money here. Look at KKR, please. People are like, oh, there's going to be a train wreck in private equity because rates have gone way up and they're going to have to refinance these deals, and look at the stock. Okay. I mean, look at the broker dealer index. The market won't pull back. This is, I want to say it's screaming strength at everybody. If you can't see this, you're just now looking at the amount of stocks with RS over 95 is huge.
Mm-hmm.
I mean, the Fed's watching this. We had, what do we have? ISM this morning came out hotter than expected.
Mm-hmm. Yeah.
So the economy is not what the market says. I'm not an economist. I'm just telling you what the charts say.
Right. Exactly. And so, Jim, do you think if we do see more adjustments to the rate cut expectations, because, towards the start of the year, the thinking was 6 or 7, now it's 3 to 4, now it's 3. How do you think the market is going to take that if we do see that move towards what you're saying? Maybe we don't get cuts. Clearly, the market has handled the adjustment from 6 to 7 to 3 to 4 very well. So do you think we're going to continue to see that strength in the market, even with those moving targets?
the greatest bull runs occur when the Fed cuts and there's no recession. I believe we are not going to have a recession, but I am uncertain about whether we're going to get cuts or how many. I think it'll be less. But you cannot. McKinsey initially expected AI single-handedly, not talking about all these other innovations, to ramp GDP, grab your bench here, by $15 trillion.
Over what time period?
Don't get me mixed up with details.
We'll look it up.
They revised the number to 25 trillion. Just for 1 second here. Okay. Just like you're saying, I said bull markets that aren't accommodated by rate cuts are going to be less powerful. But fundamentals here, economics, innovation, efficiencies that are being brought to bear here, who knows how high these stocks are going to go. You were talking about NVIDIA and you said, Jim, you said, I think we talked and I said, I think it's going to go up a lot.
Yeah.
What do you think the most valuable company in the world is right now?
Well, it's not, this one doesn't have the largest market cap of
I think you got it. You hit it right in the head. It is NVIDIA. The rails of AI run on semis, and they are the leading dominant factor there. Why isn't this stock capable of the biggest market cap in the world?
Right.
Look, I'm segueing again. Look at the SOXL, please. I think this is the greatest augmentation. I'm not a trader. I'm really not. But when I want to hit that turbo accelerator, I go straight to this. This thing, 50% of all the wealth created in AI is likely to come from semiconductors. You don't even have to buy the next IPO that comes out that says they're AI. Just load the names in this index: Micron, Avago, NVIDIA, triple levered long. Now it's too volatile to sit with.
Right.
This is a trading vehicle, but look at the names in here. MU, Micron, did we look at that already?
Yeah. I flashed it up, but yeah, let's go back for emphasis.
This could be one of those names that didn't make my initial list that has
a little
quality.
Later.
It's absolutely in the right group. And I know NVIDIA appears to be the overwhelming dominant player, but I thought BlackBerry was. I thought RIM was. And along came Amazon, and they coexisted for a while. And then Amazon, they're gone. BlackBerry's, I mean, if you're not, so there's going to be room for
BlackBerry, Apple.
Yeah. Did I get, I'm sorry.
You said Amazon. It's okay.
I did.
We knew what you meant.
Oh, I'm too excited. There's too much good stuff happening.
You too excited? No such thing.
What is the NASDAQ telegraphing? It's telegraphing not only are we going to not have a recession, something really good is going to happen. Okay.
Yeah.
I mean,
looks good to me.
The consistent weeks up in a row here, it's just walls of blue. Is it like what, 24 weeks and then only 3 of them are down?
Something like that. We've got, I think, 5 down weeks now, but last week was, a marginal down week. So
that is so rare. And the biggest pullbacks has been 4.4%. That's just like, it doesn't get better than this.
Yeah. So go ahead.
I did the same thing on IBD Live, and then we had the last leg down on the bear, and I was raging bullish at the top.
So keep that in mind.
One pullback too early.
Well, clearly you wouldn't be feeling like how you're feeling if you weren't handling this market very well. And every week in the Roppel Report, you're talking about not only market conditions, but stocks on your watch list too. So can we go over quickly some of those other watch list tickers to leave the audience with?
I mean, Uber is institutional quality gold. The list of institutions in this name is huge. It was an early leader. with a wall of blue. I think it might have been 9 weeks. Is it 99 comp?
Yep.
Okay.
99 comp. And it had a blue dot within the base. It's a little squished now, the scaling, but in that double bottom, it had an RS line blue dot, which I liked. That's why I picked it up. But go ahead,
Revolutionary
Jim.
new
You
technology.
were saying
Revolutionary new technology two times. This is a magic elixir also with earnings and liquidity. You can look at Dell, far less liquid, but it's going to be hard.
today.
Look at it. Look at how it came. I did not love the magnitude of the pullback off the earnings gap. But again, you cannot expect breakouts to do great when the market itself is digesting. 9 out of 10 stocks are going to move the direction of the general market. But now it's in gear. The servers, I didn't understand this story because they came out early, and the earnings were terrible. But the stock was just under massive accumulation. I talked to employees there. I talked to computer resellers. No one could give me an reasoning why it was going up, but it just went. And now all of a sudden, everybody's like, "Oh yeah, servers. They're the best in servers for AI." Well, the market sure knew, and now it's caught support and it's moving up again. That looks great. Oh, I mean, there's others we could like Kava is a revolution in blue zone, Mediterranean, assembly line Chipotle style,
Right.
with the chairman of the board started Au Bon Pain, Panera. He's been buying stock in the open market. They own the management. I think outside of the chief executive officer, I'm sorry, the chairman of the board owns 13% of it. Now it's really extended, but it is super early here. All right. Their goal is 1,000 stores. They're trying to grow by 15% a year in store count, which for restaurant standards is extremely high. That's really, really high. This is extended, but this is a stock I think could go. Again, I will stop on this thing in 3 seconds if it reverses. But once I get that massive cushion, I just want to sit there. There's so many other names. ISRG has an upgraded version of, I think the machine's called Michelangelo. I think they have 150 advancements.
Da Vinci, close enough. One of those
artists. The action in this stock. It runs and it tightens up. Now this is a
tight.
quality name that has lower volatility, where someone who doesn't want to take that crazy. Now, again, it's not going to, I don't know how high it could go, but for the lower volatility, you're not maybe going to have a triple. What if it goes up only 50%? I don't know. But the group of medical we haven't even talked about is coming on. Look, how do we not talk about Eli Lilly?
Oh, yeah. Got to go there too. Jim, I'm sorry I have to disclose so much. This is another one I'm in. We've got new rules.
I just looked at your portfolio. I thought we talked about all your stocks.
He did not look at my portfolio. Too funny. The story. So there's a lot of stories playing out, is what you're saying, in the medical sector. So again, AI huge, but it's not just chips and software. It's these other areas as well. There's a lot going on. Restaurants, which we just talked about, housing. So yeah, for those who have said, oh, it's just AI propping up the market, seems like there's a lot of evidence otherwise.
It was off the dead low for NASDAQ. It was clearly Mag 7 or Mag 5. But now look at Tesla. It's dead. It's roadkill. It's 11 RS. So these names can and will fail and disappoint. But some of them are going to go the distance. And we're much, much broader than we were. Hence the move up in the Russell and MDY. I mean, there's just so much. Look, we didn't even talk about gold. Can we pull up the Mona Lisa of bases?
Yeah, we have to do that. Gold and Bitcoin. How about let's finish on those?
Okay.
Yeah.
Okay. When was the last time we've seen it was this base? What is it? 14 is it 12 years? 12 years? Is it more than 12 years?
It's like, yeah.
It's a
Over
cup
12,
and a handle with a
12 and a
cup and
half.
a handle in the handle with a cup and a handle in the handle.
Right.
And now it's broken out. I've
Versus
waited
shoulders.
4 years for this. I've been writing about this for 4 years. People are telling me I've lost my mind. And all
You've
of a
been all
sudden,
over it. You've been all over
boom.
it. Yeah. So you were there. You were ready. You were waiting. And so were you hammering it hard at the beginning of March? So yeah, that's another big thing to talk about for March, this move in gold.
And why? Why are rates have been moving up, but the dollar's going down? I think we've gone from a country of, tax revenue to spending. Maybe we have a deficit of 3-4%. Trump blows it up to 20-25. Biden follows up and we're running structural deficits here, which is why normally when rates go up, the dollar goes up, but the dollar's not. Now look, I'm no economist, but these are breaks in tradition and correlation. Why is Bitcoin going up? Besides the utilization and the store of value and the institutional adoption.
And the halving coming up.
Yeah, how about the halving in 14 days? Supply is going to be cut in half, but don't worry about that. The average post-halving rally is about 300%. Okay. This is the first rally. The post-halving rally for the first time ever is greater than the prior. The prior post-halving rallies were 50% less than the prior. This one, we not only were not 50% less, we were greater than. There's something very unique occurring here. And the IPOs topped the Bitcoin market for about 3 weeks. And it's been accumulation all the way since then. And we've actually also, another unique aspect is the very first time ever Bitcoin made an all-time new high before the halving. This is really robust. Now you could flip it and say the strength we've already seen is stolen from the future. That is a possibility. But you have BlackRock, the largest institution in the world, changed the prospectus in 2 of their big funds to incorporate this ETF. They came out with the very first tokenized money market last week. The people who can see the future, like Larry Fink, are going to make a fortune here. The digitization of the store of value, stores of value, sports teams, real estate, on-chain money markets. That has happened. It's happened. The Japanese government, $1.5 trillion sovereign fund, said we are investigating Bitcoin to add. Okay.
That institutional adoption time is here. It's really ramping up. It's for real.
My own account. Okay. There's all these people that are these old stodgy guys. There's 11 of them on a board for a pension fund. They're no coiners. Under no circumstances are they going to buy Bitcoin. In my own hedge fund, when the ETF came out, I added a big position. It's absolutely helped me outperform massively. Now, when if pension guys buy Bitcoin now and they don't make money, they're fired. But what happens, like my account's outperforming because I have the Bitcoin, when 95% of pension funds underperform and the ones that do outperform have Bitcoin. Now, if you don't have it, you're fired. All we need is one cycle, 1 year, where a couple pension funds who have Bitcoin of 2, 3, 4, 5% kill everybody else. The herd is going to charge. Adoption, I've been waiting for adoption for 7 years, and it's really happening. It's like for me, I have a crypto fund, but I couldn't buy Bitcoin in my equity fund. I had to buy MicroStrategy or the bad ETFs that went to discounts and premiums.
Yeah, GBTC, which is now fixed. It's now the spot, tracking the spot price. And I'm in this one, which has a higher fee. I should have gone with something else, but
this looks really good. If you could okay, can you give me a bigger, go out 3 years on this approximately? I'm not sure it's going to see, it might not track so well because okay, look at that. This is totally entitled to a digestion at all-time highs.
Yeah.
But yet, again, knowing history is critical. Okay, you have to skip everything going back, okay? Because this thing's making an all-time, the most bullish thing, a security, whether it's lumber, corn, crypto, NVIDIA is making an all-time new high. In the fundamentals here, we have a supply squeeze into a demand explosion,
Right.
into a happening. I mean, it's so lined up. Maybe it's too obvious and it's not going to work. I don't know. Nobody's going to go, oh, it went up 200% in 2024. Like, how did that happen? No one's going to say that.
Yeah, right. I know. And you were all over it last November when you and I did that webinar. You know, you've really laid out the case for
It's so
crypto.
rare that I'm right. It's literally so rare that I'm right. I've made a killing in about 8 or 9 stocks in my whole life, and I'm wrong on all the others, and there's hundreds of them.
Which is, I think, just if we could stop for just a second, just to emphasize that, right? I mean, 8 or 9 stocks your whole career and how successful you are.
90% of my net worth is often less than 10.
That's incredible.
But when you have a 3-banger and you have 20% of your account in it, how many times do you need to do that? I mean, how many times? Think about that. I mean, you want to level up your net worth, put 20% of your account, build a position, and let it unfold for the 96 or 8 weeks of beat and raise quarters, pay half the taxes, and we'll see what happens. What do you think's going to happen if you have a stock that has 8 beat and raise quarters and you have 20% of your account in it? Like, it's a life changer.
Yeah.
Now do it 8 times over 30 years.
And then we can be like you.
Look, anybody who tried as hard as me would be crazy more successful. There's no question. I had to touch Pavlov's dog. I burned my hand way more than most. I learned slow, but I don't ever give up.
Yeah. Well, you're quite the success story, Jim. Okay. So bringing it back to a wrap on March and looking forward to April, any words to end on here? I mean, like you said, earnings season's going to be back before we know it here in a couple of weeks.
Look, the trend is up. I can't predict the black swan. I can't predict the global currency crisis. Okay. The trend is up. Lean into it. And, there's all these stats. Well, when this happens, then this happens. Historically, the market's going to go where it's going to go. If Bill was here, he'd be like, look, it's on. Okay. If we get 7 or 8% over the 50-day on the NASDAQ, hedge time. If your stock gets over its MA by a historical large number, trim or hedge, depending on whether you're in taxable or tax-free, there's no free ride here. There's going to be big pullbacks, but this is a strong bull market, and lean into it. And I expect more of the same. And I mean, who's going to hit the 3-pointer? The guy who just hit 3-pointers. The market the trend is firm. It's early. And when we get the pullback eventually to and below the 50-day, keep that list fresh so you know where to go. You don't want to start doing your research when you have the pullback. You need to know before. Mm-hmm. Don't plunge down there. Buy it on a reversal up, build the position all the way into new highs, and then sit for a couple beat and raise quarters. It's not that simple. I know I made it too simple, but we didn't even talk about Celsius.
Guidance. Oh, we didn't even talk about Celsius,
which I'm not drinking. I'm normally like this.
Yeah, well, I'm drinking it. That's probably going to go down as my big mistake, but I'd love for it to set up again. If it sets up again, I'm definitely going to buy it.
So it was
shaken out.
It was so beautiful up until last Thursday. Look at the volume shrinking as it digested.
Yeah.
Now, this is a battleground stock. I think 25% of the float is short. It might be more. The float is different than the shares. Ellie, do you want to look at that?
Yeah, we have.
When you have heavily shorted names, the volatility is just inherently going to be higher. But history is littered with companies that had distribution agreements that changed the whole dynamic. They've expanded into 2 new countries. They announced that last week. Mm-hmm. They are growing. They're killing the market share of Red Bull or Monster. Dude, this stuff is so basic. It's so easy. It's like Eli Lilly. Who doesn't understand we have a grossly obese nation and this drug knocks off huge amounts of your body weight. It's so simple to understand. You don't have to understand how they make a semiconductor or flash memory. This is so simple. And look at that. All right. I got to let you go. I know you're busy, girl.
No, we're both busy, but I know the audience has loved this. So in terms of, you said, before the pullback, make sure you have that list ready. And not everything is extended. We're starting to get some of these digestions in these leaders. So in order to freshen up those watch lists, obviously Market Surge from Investors Business Daily, a great platform to use. It is free access week, and Roppel Report. So we're going to be doing this every month for the foreseeable future. So the audience is going to get your April thoughts coming up in just a couple of weeks, but they don't have to wait until then, Jim, to get your insights, because with the Roppel Report, you're giving updates every week.
And I do drink Celsius when I do the Wednesday podcast. So.
Do you?
Oh, yeah.
What flavor?
All of them. I don't even care. My wife buys the mixed pack. I just drink them. I'm usually only allowed half a can.
Yeah.
I don't drink coffee. You have to scrape me off the ceiling.
But you like the Celsius. Yeah. I think it's a fascinating story.
Okay. I'm 60. Imagine me drinking coffee when I was 20.
That would have been fun to see. Yeah. You have the natural energy. We need the Roppel flavor of Celsius. I wonder what that would.
I'm sure people are out there saying, don't give them Celsius, give them a doggy downer next time so they can follow along.
No, we love the energy, Jim. So inspiring. So just, I don't know, you're very inspirational, but it's also very practical advice that you're giving, just, bringing us back to those fundamentals of things that we need to be looking at in those charts and the fundamentals as well. So RoppelReport.com for more information. Jim, any final words?
Yes, I have to say this. I'm not saying anything that Bill didn't say. I am a total knockoff artist to Bill, but I think everyone has the rules, but few can implement with discipline. That's
the key, right?
Knowing the rules is not following them. There are people everyone reads the book and most people don't make money. You have to follow them. Mm-hmm. So anyway, thank you. I had a great
to end on. I had a great time as well. Jim,
the golden goose.
There you go. It was just Easter. Do you go?
The golden goose of capitalism is suffocated by socialism. We're going to have more Blackberries, more Teslas, more NVIDIAs. They're never going to stop coming.
Great. Thanks, Jim. We'll see you back here next month for our next monthly market report. We'll see you then.